Hey everyone, hope everything's going well. I wanted to touch base on the markets and the S&P 500. I still expect will hit more highs in the coming month and a half. Just as the seasonality pattern plays out, this is an election year. First half tends to be strong, and we've seen that thus far. Now, the Russell 2000, if you look at the high, I look at the IWM, looking at the chart, November of 2021, that's when it peaked out. Where's it right now? IWM's 205. It hasn't hit the record highs yet, while the S&P 500 is making a record high. If the economy is as strong as some people state, why isn't that rallying? Well, people may say, oh, well, higher interest rates and all that. Well, today is a day where interest rates rallied, and still the Russell 2000 couldn't catch a bid. It actually did poorly. In disclosure, I do have longer term put options on that. And it's also, I think, the RUT, so it's like a CBOE option as well. So just as disclosure, not that it's material, I still want to disclose that. I'm looking at that. I'm looking at the fact that junk bonds, okay, it may have rallied a couple days ago, but I'm seeing, okay, move down, move down. I have a put option on that as well. So what I want to see, confirmation for me to get more aggressively short, I'm not there yet, is I want to see the S&P continue to rally. I want to see the VIX slightly go higher. I don't want to see the VIX go to like under 10 or 11. I want it in the next month and a half. I also want to see the Russell 2000 struggle to catch up with the S&P 500. We already see structural issues, like I said, commercial real estate, huge problem. If you go into work like in a big city like Chicago, New York, LA, it's dead if you go to the office. I've been to the office on a Friday and I saw, what, 9 people? That's it. That's nothing compared to what I've seen in the past. Like, a lot of companies are going to cut space, and thus a lot of these companies are going to downsize. That's going to hurt the commercial real estate market. And also, they're going to start laying people off that work from home. So you don't need that much space. Then the regional banks are going to get hit. So my game plan is, okay, if I see junk bonds go down, if I see IWM can't catch a bid, if I see the yield curve continue to be inverted as it is, and it should be, and I see everyone saying, oh, the market can't go down, the market can't go down as a sentiment indicator, I want to see the Bank of America bull bear indicator reach elevated levels. If we have all those things, the CNN fear greed index going up, divergence in the VIX, if I see a ratio that All Star Charts is looking at, consumer discretionary versus the S&P, if it continues to hit 52-week new lows like he's showing on his Twitter page today, that's a red flag. If I see lumber prices, now lumber, it hasn't gone down since I did that video. However, it's not rallying aggressively, showing a rebound in housing. And if lumber rolls over, that's another red flag. So these are things that I'm looking at, and I will act accordingly. And I believe what I'm going to be doing the next month, I'm going to be opening some bank accounts that have strong balance sheets. Because, look, if there's a bank run, digital bank run, like we almost saw with Silicon Valley Bank over a year ago, I want to be in a bank where there's not going to be a bank run, or do my best to find a bank that won't have a bank run, because it's a fractional reserve scam system that we have. They only have part of the deposits in there. And if all the deposits go, guess what? You won't have your money. So this is going to get wild. It's going to get insane. And while the markets may rip higher, crypto may rip higher, and I do have exposure to those, I don't want to be long for that long. I'm using the word twice in the sentence, but I don't want to be bullish for an extended period of time. Anyways, I want to hear your thoughts, and I'll talk to you later. See ya. Bye.